Hey everyone, welcome back to Corporate Decoder. Today, A.B.I.V.AX just filed its first quarter 2026 66K report, and I'm seeing some interesting moves in their cash and their R&D spending. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is talking about strong progress on its lead drug candidate, Obefazimod, and it looks like they're really ramping up spending to get it to market. Before we dive into the numbers, let's quickly set the scene. A.B.I.V.AX is a biopharma company focused on developing treatments for inflammatory diseases. They're a clinical stage company, meaning they're still testing their drugs before they can sell them. Their main hope is a drug called Obefazimod. And a lot of this report is about keeping that development on track. Now, like any company in this space, A.B.I.V.AX faces big risks. They openly admit that they expect to keep losing money for a while and might never become profitable in the future. Their whole business hinges on getting drugs approved and accepted by the market, plus they need more money to keep going. It is a high stakes game. Let's jump into the financials for the first 3 months of 2026. The company reported total operating income of about 1.3 million euros. This is up by 35% from the same period last year, which was around 1 million euros. A big chunk of that increase comes from depositary service fees. It might sound small, but it jumped from 24,000 euros to over 205,000 euros. This is apparently because of more transactions related to their American depositary shares, or ADSs, which are like shares of the company traded in the US. Another piece of good news on the income side is the research tax credits, or CR. They received about 1.1 million euros in the first quarter of 2026, up from roughly 1 million euros the year before. This is tied to their research and development expenses, which have gone up. Now, while income is up a bit, the real story is their expenses. Total operating expenses shot up by 19% to about 57.6 million euros from 48.2 million euros a year ago. That's a significant jump. A big driver of this rise is sales and marketing expenses, which more than doubled, going from 0.9 million euros to 1.7 million euros. This is because they are gearing up for potential future sales of Obefazimod. Especially in the US, they're building the infrastructure to actually sell the drug if it gets approved. But the biggest jump by far is in research and development. These expenses increased by 26%, climbing from 39.3 million euros to almost 50 million euros. This is the core of their business, and they are investing heavily. Looking at what they're spending on Obefazimod for new indications, including combination therapies, saw a massive increase of 8 million euros. Their Crohn's disease program also climbed by 60% as it moves into later stage trials. What's interesting is that a significant part of that R&D increase, around 17.5 million euros, comes from share-based compensation. This includes some accelerated payouts for a former chief scientific officer's plans. This is a bit of a complicated accounting thing, but it means a good chunk of the expense is related to stock options and awards given to employees. On the flip side, general and administrative expenses actually fell by 22%, from 8 million euros to 6.3 million euros. This was mainly due to a big drop in personnel costs related to their share price, and also some employee departures. All these expense increases led to a bigger operating loss. The net operating loss went up by 19% to 56.2 million euros, compared to 47.2 million euros last year. This is the price of pushing forward with drug development. However, they did see a huge swing in financial income. They went from a financial loss of 5.2 million euros last year to a gain of 8 million euros this year. A major reason for this was foreign exchange gains, including non-cash impacts from how they value their US dollar holdings. They also had more interest income and gains from investments up from their US IPO. This boost in financial income helped to reduce their overall net loss before tax. For the first 3 months of 2026, the net loss before tax was 48.2 million euros, an 8% decrease from 52.4 million euros last year. They also reported a small income tax charge of 228,000 euros this year, whereas last year it was zero. This is tied to changes in their deferred tax liabilities, particularly related to their royalty certificates. So, the net loss for the period actually decreased by 7%, coming in at 48.5 million euros for the first quarter of 2026, down from 52.4 million euros in the same period last year. Now let's talk about cash. As of the 31st of March 2026, the company had about 477 million euros in cash and cash equivalents. This is down from nearly 517 million euros at the end of 2025. Looking at cash flows, they used about 50.5 million euros in operating activities in the first quarter of 2026, which is up from 33.3 million euros last year. This aligns with that increased spending in R&D we saw earlier. Investing activities provided a small amount of cash, about 0.5 million euros, mostly from interest received on their investments. Financing activities were almost break, even this period with a small inflow of cash of just 73,000 euros. This is a big change from last year when they used nearly 8 million euros in financing activities, largely due to loan repayments. This report also details their contractual obligations. As of the 31st of March 2026, they had about 200 million euros in total contractual obligations. A significant portion of that, nearly 198 million euros, falls under off-balance sheet obligations. This often relates to commitments with contract research organizations, or CROs, for clinical trials. Many of these commitments are cancelable under certain conditions, which is good to know. A very recent and significant development is the repurchase of their royalty certificates in May 2026. They bought back all of them for about $90 million. Half was paid in cash, and the other half was essentially a loan that was immediately reinvested into company stock. This repurchase is expected to result in a substantial expense of around 43 million euros in the second quarter of 2026. Now, let's quickly look at their balance sheet. Shareholders' equity stood at about 430 million euros at the end of March 2026. This is down from 455 million euros at the end of 2025. This decrease is mainly due to the net loss for the period, which wiped out some of that equity. As we saw in the income statement, the net loss for the 3 months ended the 31st of March 2026 was 48.5 million euros. So the equity decrease makes sense. This translates to a loss per S-share of about 0.61 euros for the quarter. This is an improvement from the 0.83 euro loss per S-share in the same period last year, thanks to that reduced net loss. It is interesting to note that the weighted average number of outstanding shares increased significantly to nearly 79 million from 63 million. This is likely due to the issuance of new shares, which dilutes the existing shareholders but also provides the capital needed to fund operations. A recurring theme in this filing is share-based compensation. They granted more free shares, or AGAs, and share warrants, or BSAs, to employees and board members. This is how they incentivize their team, but it also adds to their expenses and dilutes existing shareholders. The number of outstanding AGAs is quite large, reflecting their ongoing use of equity as a compensation tool. Looking at the consolidated balance sheet, assets decreased slightly from about 584 million euros at the end of 2025 to 547 million euros at the end of March 2026. The main reason for this is the substantial decrease in cash and cash equivalents. You can see total assets are down, mainly driven by that lower cash balance. On the liabilities and equity side, total liabilities also decreased, largely because of the decrease in those share-based compensation-related provisions. Their retained earnings also took a hit, moving from a negative 402 million euros to a negative 715 million euros. This reflects the accumulated losses over time. The statement of loss clearly shows that the company is still operating at a loss. For the 3 months ending the 31st of March 2026, they had a net loss of nearly 48.5 million euros. The biggest line item here, of course, is research and development expenses, which are substantial and growing, as we discussed. It is also important to look at the financial gain or loss. They did much better this quarter, turning a loss of 5.2 million euros into a gain of almost 8 million euros. This swing is key to understanding their overall net loss reduction. The cash flow statement is where you really see the money moving. Cash used in operating activities was about 50.5 million euros, up from 33.3 million euros. This is the cash burn from their day-to-day operations, which is growing as they invest more in R&D. The cash and cash equivalents at the end of the period line shows that significant drop in their cash pile from over 516 million euros to just under 477.5 million euros. A notable item here is the effect of exchange rates. For 2026, they had a positive impact of over 7.4 million euros, compared to a negative impact of 700,000 euros last year. This shows how currency fluctuations can significantly affect their reported cash balance, especially with their US dollar holdings. The notes to the financial statements provide more context. The company is still burning through cash and will need substantial additional financing to fund its operations and develop its drugs. They currently expect their cash to last into the fourth quarter of 2027, which is a runway of over 12 months after their planned drug application submission. This is a crucial calculation for investors. They also mention a significant subsequent event, the repurchase of royalty certificates in May 2026. This was a major transaction that involved cash and stock, and it is expected to create a large expense in the second quarter. The notes go into detail about their share-based payment plans, which are a big part of their compensation strategy. They've granted a lot of these, and it impacts both their expenses and their equity structure. Financial liabilities show that they still have some debt, but many of their major debt instruments from past financing rounds have been settled, converted, or prepaid. This simplifies their debt structure. The royalty certificates are particularly interesting. Their fair value is based on projections of future drug sales, and the values can swing quite a bit depending on assumptions about success rates and market penetration. The fact that they repurchased these suggests they wanted to gain more control and remove that future liability tied to sales. The income tax note highlights that they have significant tax losses carried forward. This can be beneficial in the future if they become profitable, but right now it means they are not paying much in taxes. Finally, on financial risks, they're exposed to currency fluctuations. As of the 31st of March 2026, a 10% adverse change in the euro against the US dollar could result in a significant foreign exchange loss of over 27 million euros. This is a substantial risk given their US dollar denominated assets and liabilities. Overall, Abivax is in an investment phase, pouring money into R&D for Obefazimod. Their income is growing, but expenses are growing faster, leading to a higher operating loss. The company's survival and future success depend heavily on getting Obefazimod approved and successfully commercialized, and they appear to be making positive progress towards that goal. The repurchase of royalty certificates is a significant step to simplify their financial structure and remove future sales-based obligations. The big risk remains their need for continued funding and the inherent uncertainties of drug development. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.